Jai Hind everyone, welcome to my YouTube channel which is Explore Yourselves, Banking and General Knowledge, etc. Today I am going to discuss about important update on TDS deductions for your term deposits, the fixed and recurring, and the new process of submitting form number 121 to avoid unnecessary TDS. Introduction. This presentation aims to update you on the recent changes in the income tax regulations affecting term deposits such as fixed deposits and recurring deposits. The government has introduced a new compliance requirement for individuals and senior citizens whose interest income may fall below the taxable limit. With the replacement of Forms 15G and 15H, a new consolidated declaration form number 121 has been implemented to help eligible customers avoid unnecessary TDS deductions on their deposit interest. These introductions will guide you through the key changes, eligibility criteria, and the steps required for a smooth submission. As per Section 393(1) of the Income Tax Act 2025, banks are required to deduct TDS when a customer's aggregate interest income from term deposits with the bank is likely to exceed rupees 50,000 for individuals, rupees 1 lakh for senior citizens within a financial year. In cases where your estimated total income for the tax year is below the taxable limit, you can avoid TDS by submitting Form number 121 to the bank. The applicable income thresholds are rupees 4 lakh for individuals below 60 years of age and rupees 12 lakh for senior citizens 60 years or above. What's new? As per the revised income tax regulations, Forms 15G and Form 15H have been replaced. In place of Form 15G and Form 15H, a single consolidated declaration form number 121 has been introduced under Section 393(6) of the Income Tax Act 2025. Read with Rule 211 of the Income Tax Rules 2026. Now, who can submit form number 121? Individuals below 60 years of age and Hindu undivided families, HUFs, and individuals aged 60 years or above. How can you submit the form? You can easily submit form number 121 through net banking or mobile banking, visiting your nearest branch and submitting the duly filled form. Important points to note. Form number 121 is valid only for one tax year, so you are requested to submit this every year at the beginning of the tax year to ensure that the bank does not deduct any TDS. Bank cannot refund the TDS once deducted. However, you can claim the excess tax deducted at the time of filing ITR. You must have a valid PAN which should be linked to your Aadhaar updated in the bank's records. Form number 121 will be considered null and void if your PAN is not valid and a penalty TDS of 20% will apply. Conclusion. The introduction of Form number 121 marks a significant update in the income tax framework, simplifying the process of preventing unnecessary TDS deductions for eligible customers. By understanding the revised rules, checking your income eligibility, and submitting the form at the beginning of each tax year, you can ensure smooth compliance and avoid excess tax deductions on your term deposit interest. Request all customers to review their status and complete the submission promptly. Thank you for your attention and cooperation. Disclaimer. The information provided in this presentation is intended for general awareness and is based on the prevailing income tax laws and regulatory guidelines available at the time of preparation. Tax rules and regulatory requirements are subject to change, and customers are advised to consult the official notifications or seek professional tax advice for their specific financial situations. The creator shall not be held responsible for any decisions taken based solely on this information. Thank you very much for your patience. Request for like, subscribe, and share.